Have you ever looked at your paycheck and thought, I'm earning more money than I used to, so why does it feel like I'm getting poorer? You're not imagining it. For many Americans, a higher salary doesn't automatically mean more financial freedom. Because while your income may be going up, the cost of everyday life can rise too. Housing, food, insurance, transportation, subscriptions, healthcare. And sometimes, there's another problem hiding in plain sight. Lifestyle inflation. Today, let's break down why your paycheck can feel smaller every year and what you can do about it. Imagine you get a raise from $50,000 to $55,000. That sounds great, but your paycheck isn't the only thing changing. If rent, groceries, insurance, transportation, and other expenses increase, that extra income may disappear surprisingly quickly. Your salary number is bigger, but your purchasing power may not feel much bigger. That's why looking only at your annual salary can be misleading. The better question is, what can my income actually buy? For many households, housing is one of the biggest monthly expenses. Rent or mortgage payments are only part of the picture. There can also be utilities, maintenance, insurance, property taxes, and other costs. And when housing takes up a large portion of your income, there's less money left for saving, investing, emergencies, and everything else. A raise can feel exciting, but if your housing costs increase at the same time, that raise may not change your financial situation as much as you expected. You might not notice a small increase in one grocery item, but when dozens of everyday expenses become slightly more expensive, the total can become significant. Think about groceries, restaurants, coffee, transportation, phone bills, entertainment, and subscriptions. A few dollars here, a few dollars there. Individually, they don't seem like much. Together, they can create a serious monthly difference. That's why reviewing your spending regularly can be more useful than simply asking whether you got a raise. Now comes one of the biggest reasons people don't feel richer after getting a raise: lifestyle inflation. You get a raise, then you upgrade your phone. You eat out more. Often, you subscribe to more services. You move into a more expensive apartment. Maybe you finance a more expensive car. None of these decisions automatically make you irresponsible. Problem happens when every increase in income immediately creates an increase in spending. Your income goes up, and your expenses follow it. So your financial position barely changes. Here's a simple idea. Making more money and keeping more money are two different things. Someone earning more but spending almost everything can still feel financially stressed. Someone with a lower income who carefully manages expenses and builds savings may have more breathing room. That doesn't mean everyone should simply spend less. It means you need to understand where your money is going. Your paycheck should have a purpose. So what can you actually do? First, track your major monthly expenses. You don't need to obsess over every dollar. Start with the big categories: housing, transportation, food, insurance, debt payments, subscriptions, and savings. Second, when you receive a raise, don't automatically increase your lifestyle by the same amount. Instead, consider directing part of that increase toward your financial goals. For example, you could increase your emergency savings or long-term investments, depending on your situation. Third, review recurring expenses. Subscriptions and automatic payments can be easy too. Forget a service costing $10 or $20 per month might seem insignificant, but multiple subscriptions can quietly become hundreds of dollars a year. Fourth, avoid comparing your lifestyle with people online. Someone else's expensive car, house, or vacation doesn't tell you what their financial situation actually looks like. Focus on your own numbers. Here's a simple habit you can try. Before making a non-essential purchase, give yourself 24 hours. If you still want it tomorrow, and it fits your budget, you can make a more deliberate decision. The goal isn't to stop spending money. The goal is to stop spending automatically. So, why does your paycheck feel smaller every year? Because your salary is only one part of the equation. Your real financial progress depends on the relationship between income, expenses, debt, savings, and purchasing power. A bigger paycheck can help, but if your expenses rise just as quickly, you may never feel the difference. The goal isn't simply to earn more, it's to make sure that when your income grows, your financial security grows too. If you found this useful, subscribe to Daniel Wealth School for more simple money and investing explanations. And remember, more income is good. More financial freedom is better. This video is for general educational purposes and isn't personalized financial advice.